Hello everybody, Joe Malone here, coming to you live on Dallas Trading Floor. Well, it's Tuesday, and boy, there was a big sell-off today. Of course, one of the stocks that got hit was Tesla. I sold about half of my position. I had a stop loss at 258.50, so I took a little bit of profit there. I'm glad I did. Boy, oh boy, it has. But I think this may be a blessing in disguise because we may get another chance to come back into the stock. Let's take a look at the overall market here really quickly. Basically, what I've got is the Nasdaq was down, the S&P was down, and the Dow Jones was down. So it's a trifecta. We were down on everything today. So wow, that's just the way it is. So we were down, and the rest of the market, well, it was down. So there you go. Let's take a look at the Nasdaq Composite here. This is a good thing to look at because this shows us the last 2 days, and basically we topped basically here on Friday. This was our top here, and then yesterday, of course, there was a sell-off, and then today we came down to support, and I think that's the 10-day line. So potentially we have some support here. If we go below this, then we may have to brace for more heavy weather. But definitely, this is what the Nasdaq looks like. Let's take a look at what the S&P looks like, and that is a little bit. I would say that it's like the S&P 500 here. Same kind of action as you can see. We're coming. We topped here on Friday, then on Tuesday we were down, and today we're down. We're down basically. I think the support is right here at the 10-day moving average. So let's jump on over to the QQQ. This is the ETF that covers the top 100 stocks in the Nasdaq, and of course those are the stocks I like to trade the most. Of course, same kind of action again. Very almost identical to the actual overall market, topping basically on Friday, Tuesday, and then today, Wednesday. I think we're going to get some support, and the reason I do is because you can see we got some support here last week. I think we're going to get some support right there, and so that's my guess. But I do think that it's going to stick to the 10-day line. Currently on the QQQ, the 10-day line is right at 361. So that's a critical level for the Qs. I think 361. In the after hours trading, we're at 362. So I do think we're going to get some support. Here's what's happening. We pulled down to 361.90, which is almost exactly the 10-day line. Then in the after hours trading, we're up, and so I do think we're going to get a bounce here. So this may give us an opportunity. Again, I sold about half of my Tesla shares, but I do think that this may give us a chance to get back in. Here's kind of my trading plan. I want to show you. This is the trading plan that I have. As you can see, we came down to basically, let's move that over for people on TikTok so you can see what I'm talking about. This is the Tesla chart. I think that we can buy Tesla if we set a limit at 250, but I also think that we can move it up a little bit from that. This is kind of my analysis here. Tesla, since it started its move below the 200-day moving average, you can see it tested once here, and then it looks like it's going to test again. Currently, the 10-day line for Tesla is at 250.59. So that's where it's at. So that potentially would be a good place to possibly put our limit order. Now, here's a site that I really like, and I hope that maybe you can take a look at it. It's called Earnings Whispers, and that's the name of it. And the interesting thing about it is it kind of shows you where the pivots are, and that's very cool because right now the pivot has moved up. It was 260 yesterday, and it's 270. That's because I believe Tesla is getting ahead of itself, and so the pivots have moved. Now, I do think that there is support, and the after-hours price of Tesla was 257.10. I think that there's support at 256.48, so almost right there. So if we were a little bit of aggressive, we could buy there. Now you'll notice that the third pivot down is 251.63. So this is almost exactly where we're getting, the almost exactly where the 10-day line for Tesla is. I'm just going to jump on over to the live chart here. Here we are. This is the live chart. What I'm talking about is right about here. So that's kind of what I'm talking about in terms of the chart. So I think that, this is where the 10-day line is. I think we're going to get some support a little bit higher than that right about here. So I definitely think we're going to open, and we're going to open down tomorrow. So don't buy on the open. Set a stop. Here's what I'm going to do. I'm going to set a buy order, and I'm going to try to see if I can get it filled. And that is the buy order for Tesla that I'm going to do tomorrow. Is at this 259.59. That's where I'm going to try to buy it. So we shall see. I sold today half of my position at 258.50. 258.50. That's where I sold half of my position. I'm going to let it drop down to 250, and then I'm going to rebuy it. I definitely long-term am very bullish on Tesla for a lot of reasons, but of course it's going to adjust. It went up very, very quickly. So when it falls like this, you got to take profits and move forward. So that's kind of my take. That's kind of my take on how I'm playing Tesla, at least for right now. Now I did liquidate my entire position in Nvidia, and I took profits there, and that was actually at the end of yesterday. So I'm actually, I've been selling today. I did take a little bit of profit. I sold half of my position in AMD. I probably should have sold the rest the way it's been running. But here's the current fundamentals on the portfolios that I have. Yes, you'll notice, we've had a lot of price change. I mean, Palantir has been up in the last quarter 100%, and Tesla's been up 100%. So that's a little bit much, and I think it's going to correct down. Now, Google and AMD, they're down. So go figure. I mean, go figure. Let's go pull. There we go. So this is my overall portfolio, and I did do some trimming. As you can see, there's only 5 stocks on there right now, and that's definitely an issue. Tesla was down 5.46% today, but the volume was up, so there's a lot of selling. It's since returned to 259.46, but in the after hours, it's trading a little bit lower at 257.10. So that's currently what the after hours is saying. Samsara, that was down too, but on lower volume. So I'm pretty confident on this one. We were down basically 3%, but again, this is not that expensive stock. Now the real story today was Palantir. That was down on heavier volume, about 7%, and I did trim my position a little bit, but I still have a lot of faith in this one as well. Google, that is just kind of continued to slide. I don't quite know why that's happening. I may have to cut my position in Google. Don't have a tremendously large one. And AMD, I did cut that earlier today. It was down to 112. My overall exposure to the market now is about 55% in stocks and about 55% and about 55% in stocks, about 45% in cash. So I did cash out a lot today. All right, let's take a look. Lisa, thank you for holding. Jim, all my holdings are at a critical level at the 21-day exponential moving average. That's a really good way to trade, Lisa. By the way, the 21-day exponential moving average has been shown in studies to be kind of where things happen. So if you can keep support at the 21-day, it's typically wise to hold. If it falls below that 21-day and it's an upward trending market, then it's a good idea to to hold your stocks. Now, here's what I do. I typically will look at a key level like the 21-day moving average, and then what I will do is if it moves below that, then I will typically cut half of my position. That's how I do it. So let's say, for instance, let's go to a stock that definitely has fallen. Let's look at AMD and just kind of analyze that so that we can see kind of where I would be putting my stops and the whole thing. So let's do that, and I'm going to just jump on over to the AMD chart. Here we go with the AMD chart, and basically what's going on here with the AMD chart. And let's take a look. Let's take that off because that's a little. Oh, wait a minute. That's a little bit. There we go. That's a little better. Okay, so here's what happened with AMD. So this kind of gives you an idea of why I think it's a good idea to put a stop loss in at the 21-day line and cut by half. So here's what I do. This is what I did with AMD today. So you can see it's up a little bit in the after hours. It's trading at 112.23. What I did though is I had my AMD, and then I cut half of my position right at the 21-day line. So if you have, for instance, a stock, figure out how many shares that you have. Try to this is just a good thing. If it falls below that 21-day moving average, cut and sell half your position at market. Then let it go down, and then it probably will bounce. Now I don't know if that's going to happen with Tesla, but you can see we round trip, and this is always heartbreaking. See, we had this beautiful gap up, and then and this is the reason that you cut half at this is so you don't round trip all your profit. That's the main thing. Try to not round trip all your profit. So here's what I would do tonight. I would go ahead and put some stop losses in there at the 21-day line, and that might give you. And what I would do typically, and it's not a rule of thumb, but I would typically sell half of my position at the 21-day line, and then keep half of it, and then basically, if it falls to the 50-day line, I'd sell half again. So this would basically, if it goes basically down, basically below that pivot, and this is AMD that we're looking at, you would be 75% out of it, and then eventually I think we're going to get some support. But take a look at the chart overall. We're going to look at the weekly chart here. The weekly chart's moving up, and so you want to make sure that you're in stocks that are moving up. If you look at the weekly chart overall, you want to see this kind of action overall. Now in the short term, it's going to rise and it's going to fall. That's one of the reasons why we typically, when we're buying a stock, when we're moving into a stock, we buy 50%, half a position below that pivot line, 50%, 25% at the pivot line, and 25% within the buy zone. That's the ideal, and that gets you to one full position. And as it's moving up, now coming down, you want to do the same thing. You want to sell half of your position at you want to sell half of your position at the 21-day line. Then, if it comes down to that 50-day line, you want to sell half of it again, and hopefully it'll come down to that 200-day line. You want to be all the way out at the very minimum. So this is going to give you a chance. I think what's going to happen with right now, right now the market is digesting the move that was made before. There was a big move, and it's digesting that. So that's what I think. That's kind of how I'm looking at it. Thanks for that great question. Let's see if we can find somebody from TikTok. Sometimes it's hard to see. Let's see if I can kind of move this down so I can see these questions better. All right. Hi, Mr. Malone. Why is Amazon down? Well, I don't know, but let's look at the Amazon chart. Thank you for coming in on TikTok. By the way, if you want to see the entire chart, you can jump on over to the YouTube channel, youtube.com/Dallas Trading Floor. So we're going to take a look at Amazon, AMZN, of course, That's one of the FANG stocks, and the FANG stocks have been pulling back. That's definitely the case, but it's still looking pretty good. Let's jump on over to the FANG stock, the Amazon. Now, it did move lower today, and it's moving lower. It moved down to 124.83, but it's been on an upward trend. As you can see, it's hugging that 10-day line. So basically, this is kind of a natural thing. When a stock moves up very, very quickly, then it has to digest it, and typically will come down to a bottom to like either the 10-day line or the 21-day line. Now the 10-day line, this is the 10-day simple moving average. This is the pink line here. The simple moving average. This is when a stock is starting to move. This is where you want to be. You want to try to buy it as close to that 10-day line as possible. Now currently for Amazon, we are almost right on that 10-day line at 125.18. That's where the 21-day. That's where the 10-day line is. We're at 124.58. So we're right at the 10-day line. Now, would I buy it here? Well, I think that probably Amazon is going to pull back, and it's going to pull back to that 21-day exponential moving average. If I were going to buy Amazon, I would look to buy a limit order at this line. Why? Because I think that's going to give us the best bang for the buck, because we're still in an upward trend. So this is the secondary buy point. A primary buy point is the buy points that I talked about before. Now, if we're talking about Amazon, the Amazon buy point is, and let's get my little recognition here. It's called pattern recognition. We are actually below the cup with handle 176.24 buy point on Amazon, interestingly enough. So in the past, Amazon has been higher. There we go. So in the past, Amazon has been higher, and the buy point is right, it's way up there. This is the Amazon buy point. So we still are in this cup action, and we still have a long way to go, but we have some resistance. We have some resistance there. So with Amazon, we have turned the corner. We're moving up, but we have some resistance. If we go over to the daily chart here, we can kind of see that. Let's take that off really quick so I can. Oops. What I'm doing is I'm taking off some of the. Yeah, there we go. So we can see a little bit further back into this is Amazon that we're looking at. The next level of resistance is right about there. So what's going to happen is that the stock is going to continue to get support either at the 10-day line or at the 21-day line. I suspect we're going to get a pullback probably to the 21-day line. So if I were going to buy this one, I would try to buy this very close, within 5% of that 21-day line, and that would be the 21-day line is 122.23. So what I would do is, I wanted to pick up some more Amazon, would be that I would put a 122 limit order in, and then hopefully it pulls back to that and we get that. Now Amazon is struggling a little bit. It's going sideways, but it's still quite a strong stock, 86 relative strength. So I definitely like that. So that's a really great question. Thank you for that. And let's take the next question. The thoughts on Riot Blockchain. Wow. Okay. Riot Blockchain, of course, is the crypto stock, and it is. I don't trade it, so I'll be honest with you there. I don't trade Riot right now, but it definitely made a move. It's basically going to move in sympathy with Bitcoin. And Bitcoin has been, it kind of looks like Bitcoin moved up a little bit. What happened is Riot Blockchain came down to the bottom of its consolidation. That's right about where I drew that. The bottom of the consolidation for Riot Blockchain was about 950. It does have a very strong relative strength, 98 relative strength, so it's trading in the top 2%. Now the question is it going to make a move? It's been in this trading range. It came down, and then it looks like it's gotten some support. It looks like we're getting a bounce. So it definitely looks like it's going to get an upward, it's going to get some upward trend here. So that's really interesting. Riot Blockchain Very interesting stock. So let me just put some more information in there. There we go. See, as you can see, it's in this trading range. The top of the trading range, 1445. The bottom of it, right about 950 or so. So it's come down. It's going to probably make a next leg up. So if I were a betting man, now this is more of a speculative stock. That's where I think that you're probably going to get a move. Here's what I would do on this. I would probably try to buy it above about 1175. So what I would do here, set a limit order 1175, and if it moves above that, buy it, and then I think it will sail on up to about 1445. You could definitely make some money doing that. So that would be an interesting play on Riot blockchain. So thanks for that. All right, let's see if I can get some more people here. What I'm doing here is on TikTok, so I'm trying to look at it. Here we go. Here's TikTok again. What would be STLD. This looks from Johnny. Johnny, how you doing? This is STLD. Let's look at that. STLD. I think this is the ETF that covers the Steel Dynamics. I apologize. This is definitely an infrastructure play, steel has it hasn't been doing quite as well recently. Technology's been where it's at, but just putting a banner up to. Yeah, did I spell that right? No, I didn't. Golly, man! I tell you, I need some help with that spelling. All right, so this is here. This is Steel Dynamics for. Oh no, that's the wrong one. This is for the TikTok viewer, Johnny. Thank you very much for Johnny. And this is trying to answer your question as best I can. All right, here's the thing about Steel Dynamics. Steel Dynamics just had a what they call death cross, so it's going to probably go lower. Why? Because the 50-day line is moving below that 200-day line, so that's showing weakness. Even though it does have a fairly good relative strength at 79, that means it's in basically it's not quite in the top 20%, but it's in the top 21%. So, it's getting weaker, unfortunately. So, this is not something that I would probably buy because even though we're in an upward trend, we're getting rejection at the 200-day moving average. I don't think I would buy this one. I think if I had any profits in this one, I'd probably be a seller here, just because of that. The 200-day line, we're just right on the 200-day line is 101.80. So it looks like you don't want to buy anything really that is at or moving below the 200-day line. Even though it's up in the after hours, I think it's going to move lower. Unfortunately, I think it's going to move lower. So I would be out of Steel Dynamics. It just doesn't look like the place to be. All right, let's see. Google Head and Shoulders. All right, thank you for that, Mr. Deep. All right, let's look at Google. And I have Google, by the way. I'm holding it now. GOOG. I do think it's somewhat undervalued, but that's my opinion. All right, let's see. Here's what happened with Google today. You know, we violated we violated that 21-day line. So probably what I'm going to do in the morning, because of this, is if it doesn't move up, I'm going to be selling half of my Google position. Why? Because, well, I don't like things that violate that 21-day line. I like to buy in pullbacks to the 21-day line, but if we lose support at the 21-day line, that's where I like to sell too. So I typically will sell. My first reduction usually will be a 50% sell there. Unfortunately, if we look at the relative strength line, it's moving down. So the relative strength of Google Alphabet is lessening against the S&P 500, so not the good thing. We definitely see some selling going on here. Don't know why this is the case. We still are in an upward trend overall with Google, but I may be trimming a position because it does look like it's getting some resistance and it may be kind of having to form a base here. This is you know, this isn't really a high tight flag, but it's kind of was one, but it looks like it may be failing. So the question is, can it get support? I think that it's got to get support at about the 21-day line. I mean, I think that's the really critical line for Google. And if we look at that, if we go to the daily chart and we jump on over to the 21-day line, well, the 21-day, it's 1% below the 21-day line. The 21-day line is 122. So I'm going to probably put in a buy stop limit order, and that basically if the price when it opens is below 122.62, which it probably will be, then I will sell half of my position in Google. And the reason I do that is because we may not get support at that 21-day line, and if we don't, well, it's time to sell. Time to reduce that position. Okay, all right. Thank you very much, NASCAR. Do you trade small caps? Well, I do somewhat, but I do. Here's the thing about small caps. You know, you can make money selling. You know, I started with penny stocks, but many years ago, back in the dark ages. It was really kind of hilarious. I was actually working in a hotel. I know this. I'm not getting into really old stuff. Back then, there wasn't any online online trading. So I traded penny stocks because I didn't have that much money. And every time I would get on break, I would go down to the break room and then I would call my broker, which was in Salt Lake City. It was terrible. And I would either buy or sell depending on what the price was. And well, I did make some money, but I also lost some money too. So I typically don't do small caps because they don't have enough liquidity. That's the main issue for me, is liquidity. And I want something that, like with Tesla, I just punch the button and I'm sold, I'm out. Whereas back in the day when I traded small caps, these were almost like penny stocks. What would happen to me was that I would call it in an order, and then maybe I would get a fill, maybe I wouldn't get a fill, but you know, it was terrible. So it's improved a lot, but you know, I still believe you're better off trading some of the more liquid issues. It's just my opinion, but I definitely think you are better off trading some of the more liquid issues. All right, let's take a look for Apple. Is there a chance to get in below 180? That's a very good question. Of course, Apple is a member of the $1 trillion club. It's the largest cap stock in the world. It's absolutely amazing. Now, one of the reasons why I'm excited about what's happening with Tesla is because that one also may become in the $1 trillion club. But let's look at Apple, APPL, and jump on over to that chart. There we go. Oh, no. There we go. There's the Apple chart. Now, hopefully, I was showing you the Google chart, the wrong chart. AAPL. Yeah. Third time is the charm. There we go. There's Apple. All right. Well, actually, it looks as if in the after hours 1:30. So it looks it looks as if there may be an opportunity. Apple basically just didn't break a sweat here. Came down to that 10-day line, got a nice bounce at it. I don't know if we're going to get another bite at the apple. A little bit of pun there, but let's take a look. I think that that you could size an order. You know, here's the thing: the 21-day line is at 180.20. So that's right here. I don't know if it's going to come all the way down. Now it did test here. And here and here, so it definitely, Apple likes to buy on that 21-day line. So here's what I would do here. I would, you know, if you want to pick up some Apple, I would set a limit order, basically here, and I'd set it at the 21-day exponential moving on. So I'd set limit order at, and I'm gonna say at the 21-day line. I think that's kind of where you want to go, and that's 180.20 currently. So 180.20. Okay, so that's kind of what I would do with Apple if I wanted to pick up, if I wanted to pick up some Apple. Would be that I would set that right here, 120, 180.20, right at that green line, and not the best artist here. But I definitely think it looks like it's in a short-term decline. If we get another weekday tomorrow, which we very well might, I think it's going to pull down and it's going to test the 21-day line. That's where I would buy it because I think that's going to give us the best bang for the buck. But overall, Apple is still in an upward trend. All right, let's see if we can get another question from TikTok. All right. Okay, let's look at AMD. This is for Anteater. Great. Okay, so this is answering Anteater's question, which there we go. All right, so let's jump on over to AMD and see what's going on. Now I did cut position. I did cut AMD today. And I did sell half of my position as it kind of went south. So that's what I did. The question, and here's the thing with AMD. AMD is a tough stock to trade because it does this. It blows off and then it pulls back. So here's what we might want to look at doing. I don't think it's going to move down to 102. I doubt it. I doubt it. I think we're going to get some support, but I don't want to buy it right now. If anything, I want to sell it. I basically cut half of my position at that 21-day line when it decisively fell below that. Now I still have some AMD. I still have some AMD that I did buy, but I reduced my position here. This is why it's so important to try to buy, 50% below the pivot, then 25% at the pivot, and then your top buy should be at about 5% above the pivot. Pivot on this one, 102.43. So that's how you want to scale into the position. And so, but the problem with AMD is very spiky. I definitely think we may get another down day tomorrow, but I think once it gets down to about 110 or so, we're probably going to see it move. We're going to probably see it move higher. Now, here's the thing: we know that AMD is going to be healthy if we can move back up to where that gap up was. Currently, that was about at 116. So if we get, I wouldn't buy it until we get a turnaround and until we get really basically above that 21-day line. So right now, I would not be buying it. I would wait until we get decisively above that 21-day line. The 21-day line currently 117. So basically you could start buying at about 116.50, but you gotta wait until it moves higher. So here's the thing with AMD: if it's dropped below the it's a good idea always to cut your position if it falls through that 21-day line. But if it moves above, then to start buying. So that's this is kind of your if you think of a teeter-totter, this is kind of where you want to be. You want to get bullish here as it moves above that 21-day line, and you want to get bearish here when it moves below that. So that's kind of how I trade on something like AMD. All right, let's go back to the questions from YouTube. Why can't I remember what I'm talking about? All right, this is YouTube. This is MongoDB, MDB. I've traded this one before. I haven't traded it recently. It's just moving like amazing. Here's the thing: it did gap up today, and that is indeed interesting because the pivot 248, then it moved up to right below 300, right there, and then the gap up was basically on earnings. We had good earnings. Let's look at the earnings, kind of see how they came in, and see that. So yeah, the earnings were looking very good. The earnings in Mongo, we were up 29% in terms of the sales, and of course, because this is like a software product, that's almost all profit. 180% up in terms of the actual earnings. So that's why it reacted very, very nicely on that. It went to 113 a share cash flow, so that's really good. Still extremely high price to earnings ratio, 336, but it is sort of a tech stock that does like that. Here's what I want to do. I want to compare Mongo with Oracle. I want to kind of look at this ORCL to see kind of which of the two makes the most sense in this sector, because those are basically they're going to be the biggest ones. I'm going to look for since the first of the year in two really big database stocks, MongoDB and Oracle. So let's see which one has the better chart. All right, and there we go. So here's the two charts for MongoDB and MongoDB and Oracle. If we bought the same amount of shares with the same money, if we bought the same money at the beginning of the year, Mongo would have been up an incredible 90%. That's amazing. And Oracle would have been up about 50%. But let's zoom in more. Let's go to July. Oh, no, we can't do that, can we? Let's go to 4123 and see. Still the same thing. Obviously, MongoDB is outperforming Oracle. So since April 1st, Mongo looks better, definitely better. So there's no. That's very interesting. That is indeed the case. All right. So would I buy it? Well, let's jump back and see. I'm going to jump on back over to the chart. Okay. There we go. So this is Mongo. I'm going to go to the daily chart here. There we go. So this is the daily. Oops. So this is the daily chart of Mongo. Is there a place to get in? Well, I don't know. I probably wouldn't buy it. And this doesn't really give us that great of an opportunity to buy it. Here's the thing. If we can wait a little bit and possibly see if the 21-day line will catch up. If the 21-day line catches up, that's where I would buy it. But right now, I'd like to buy it, but I don't think I can buy it here. Definitely some selling going on. So I probably would not be, at least in the short term, a buyer of Mongo, because it just isn't a good. It's not the stock. It's the position that it's in that I'm having issues with. All right, drunk Squidward. Let's look at the two airline stocks, JetBlue and Delta Airlines. Let's look at Delta first. And boy, I tell you what, something must be going on in this area, because it has been amazing in terms of its move. The pivot on Delta right here at 39.62, we definitely moved up. We definitely have some resistance here. So what's the question? The question is, where is the resistance? And I think it's right about there. That's the right about, so about 48. So what would I do with this? Well, let's take a look at the reversal line. Here's what I'm going to do. What I'm doing here, for everyone that knows, is I'm showing when it moved from a downward trend to an upward trend. All right, up until basically the beginning of June, this was, believe it or not, in a downward trend. It's a slight downward trend. Then in the beginning of June, it moved to an upward trend. So definitely it's moving. It's definitely an upward trend. That's a very good thing. Let's look at the weekly chart to see if it's recovered. And what I'm going to do here is I'm going to look at the bigger chart. Yeah, you can see it's coming up to some. Okay, so it's gotten rid of its overhead supply. This is the line of overhead supply here. So it looks as if most people most people have bought it below. This is real interesting. So most people have bought it below that level. The question is, what is that level? Let's look. All right. So here's the thing. If it can get above about 45, and currently it's at 42, then I think it's going to move a lot higher. But right now on this one, I'd kind of wait. I would wait for it to move above and close above 45. That's where I would do it for this one. Now let's look at JetBlue. JBLU. And you know, travel is coming back, but these companies are not profitable. That's the main issue that I have with them. With JetBlue, also pretty volatile chart as well. I'm going to go over the weekly chart here to see. Yeah, we're still in a downward trend on JetBlue, unfortunately. So I probably would not be buying it here. I would just wait on this one until we get something. There is a pivot on a cup basis. Now, if JetBlue moves above $9.35, that's where we want to start buying it. Okay, so right now the pivot, you know, right now the pivot for JetBlue is equal to $9.35. So if we were to buy it, and I don't recommend buying it here because it's still in a downward trend. It really needs to move above this level, 935. It really needs to move above and close above that level in order to be buyable. So I would not be a buyer until we could see it move above that. Currently, JetBlue is at 814. So this is definitely a watch list. If it can move above 935, that's where I'd be buying it. But here's the thing, and I want to be clear about that. This area is not an area that looks all that great because if we look at the fundamentals on it, sometimes it's hard to grab these. It's not letting us do it. All right, so looking at the fundamentals here, our sales are definitely up, but we're still in a loss position. So this is not good. Currently, we do have some cash flow, 927. That's basically from the first part of the year. But this last quarter, they did lose some money. They lost 34 cents a share. So they're down. So right now, again, I would wait until we saw some more profitability with this one on JetBlue. So that's kind of my take on it. All right, we're almost at the end of time. We're not at the end of time, but let's go back to the comments and take one more. Thank you very much, Ash. Appreciate it. LQDA. I'm not familiar with that. LQDA. All right. Oh, interesting. Okay, I don't know this stock. I'll be honest. Oh, it's a medical company. Okay, medicals for me are tough because I just don't have a lot of the inside information. It's just, you know, it's just one of those things. I don't typically have as much. Okay, if on a strict technical basis, it's moved above the pivot. 810 is the pivot on that. 810 is the pivot right here. But we're out of the buy zone, so I kind of would wait. You know, if I was going to buy this, I would buy it a little bit closer to that 21-day line. So let's see if it pulls back to there. The 21-day line on this one, $8.40. That's where I would probably set my limit order to buy. But it is an upward trend. That's good, and it is in a good area. Biotech is 21 out of 197, so really pretty good. But I would buy it at the 21-day line. That'd be about $8.40. Typically, I don't like to trade, as you know, that many shares under $10. Why? Because, well, they don't get as much support from institutions, and that's really what. In order to make really big money, that's kind of what we're always looking for, is that institutional support. That's so important. to make money. Well, thanks for holding with me, everybody. I'm going to be back tomorrow again, but I have a favor to ask always, and that favor is if you could smash that like button. It really helps us. If you smash the like button, that really helps us and get out there to everyone. By the way, if you're not already a member of Dallas Trading Floor, it's super easy. Just jump on over to www.dallastradingfloor and sign up for our action trade alerts. I don't know if I'm going to put out anything tonight. I might put out something on how I'm trading Nvidia, because I did sell all my shares, but I'm waiting for a pullback. I may buy them again because this is an instance where we have some weakness. So I'm going to try to analyze my buy on Nvidia and hopefully get it out to everybody that's on the action trade alerts. But again, I'll be back tomorrow. Thank you so much, everybody, and happy trading. And right now, don't panic. Don't panic. But anything that's closing below that 21-day line, consider possibly selling it, half of it, and then waiting for it to reverse. So I will be back tomorrow again, as I said. And thanks, everybody. Please sign up for the action trade alerts, and also please like the show.